Joining us now is domain economist Trent Wilshire. Trent, you've got some comparisons for us about the top end of the market and also the lower end. Is there a comparison?
That's right. So I've put out some research this week and basically asking the question, do more expensive suburbs in capital cities see faster price growth than the cheaper suburbs? And the answer I've come up with is it's actually different across all the capital cities. So it really says to me the Australian property market is actually a bunch of different markets, and within the capital cities things behave differently, across all the different suburbs as well.
Right. So let's kick off with
Melbourne, please.
Yeah, so Melbourne. Melbourne is a clear pattern. The more affordable suburbs have seen much stronger price growth than the more expensive suburbs over the past 5 years. So the big standout there is Toorak. Toorak, Melbourne's most exclusive suburb. That's jumped by 10% over the past 5 years. Compare that though to the more affordable areas, Melton South. That's actually jumped by 71% over the past 5 years. So generally the cheaper areas have performed a lot better over the past 5 years.
There's a huge difference in Melbourne there. What about in Sydney?
So Sydney, it's the very cheap and the very expensive suburbs have really seen the strongest price growth since 2014. So the biggest standout is Budgewoi on the Central Coast. That's jumped by 60%. Then at the other end of the scale, Vaucluse in the eastern suburbs, Australia's most expensive suburb, that's jumped by 77% since 2014.
Wow, so everyone's a winner there, top and bottom.
That's right, and Mossman as well on the North Shore, that's also grown pretty strongly.
Okay, and Brizzy?
So Brisbane, no really clear pattern, so pretty much different
Free
suburbs. Yeah, different suburbs have seen fast, slow price growth, that's right. So a couple of outliers there, Mermaid Beach up by 64% since 2014. The other end of the scale, Newport in Brisbane's north, that's actually fallen by 11% over the past 5 years. So really different performance across southeast Queensland.
I'm starting to see what you mean about all different.
Yeah,
here,
all different stories.
But if we head over to Perth, because it's quite an interesting property story in general, but what have your numbers been telling you about Perth?
So Perth overall down quite a bit over the past 5 years. So the median price is down almost 15% since 2014. But there's the clear pattern is that the more expensive areas have performed better. And the biggest standout is Cottesloe, so beautiful suburb on Perth's beaches there. That's actually jumped by 26% over the past 5 years. And that's compared to the whole market being down quite a bit. The other end of the scale, it's really the outer suburbs of Perth that have been hit hardest post the mining boom. Example there is Merriwa, that's down by 17%. Mandurah is also down by 17%. So these, more the fringe suburbs of Perth, they've really been hit hard and house prices have fallen quite a bit over the past 5 years.
I've learned in the past few weeks, just being here with Chris, that Adelaide is sort of a bit of a quiet achiever. What's happening there, top and bottom?
It has. So the Adelaide median price has jumped by about 20% since 2014. But again, it's more the top end of the market in Adelaide has performed better. So the standout is North Adelaide, so just north of the CBD there. That's up by 26%. At the other end of the scale, the cheaper areas have generally seen more modest growth, and Hackham there is only up by 9% since 2014.
It's so interesting to hear you talking about the sort of the micro level, looking at the suburbs here, and I think there's a lot of prospective investors out there who are very interested in that. The other thing here, though, is this 5-year time period. What do you think of that? Is that an important period for investors to be looking at?
I'd say it's a reasonably long time frame, but I think if you're an investor or a first home buyer, you're probably looking at a longer time frame in terms of when you're buying. So 10, 20 years sort of time frame is how long you really want to be holding on for a property for, just because we know there's transaction costs, stamp duty, agent fees, etc., etc. So it's really a longer time frame. I've just sort of looked at a 5-year period there, but also over 10 years in some of those cities the pattern also holds.
Okay, so it's obvious I love my property and I would rather invest in property than say shares because it's something I just don't understand. So you're saying if you're going to hold on to a property for 10 years or more, you're going to do all right, aren't you? Like, we're not going to lose, economist Trent?
In general, that has been the case across Australia for sure. But as we talked about, the Perth market has been pretty soft and quite substantial falls from the peak. But before that, with the mining boom, prices shot up an absolute, a lot. Generally, yes, the property market's performed very well over the past 25 years, and that's really been driven by interest rates coming down quite a lot. Strong population growth as well has been a factor, and also an undersupply of housing for a while. So these factors have really pushed up prices in most places.
Trent, whenever I hear or see an ad for a financial product, they always put at the end, past performance is not a reliable indicator. So
Yeah, I probably should add that disclaimer to my research as well. So yes, this looks at the past, but some patterns may hold. But again, it's sort of changed over a 5 or 10 year period as well.